Hey everyone, this is John Fennick from the Fennick Commodities Report, and with me today are John Darch and Ken MacLeod, the chairman and CEO of Sonoro Gold, SMOFF in the States, SGO in Canada. Welcome, gentlemen.
Pleasure to be here, John.
Thank you, John.
Yeah,
Great to
nice.
see you again.
Likewise, Ken. I know it's been pretty recent that Don Durrett and I interviewed you the first week of June, but obviously there's been some positive developments at your company, and we wanted to have you back on quickly, given this market is really moving fast. We're going to get to you guys in just 1 minute. I just wanted to make a few statements up front here. We really believe in the Mexican story with President Scheinbaum coming in October 1st of last year. And investors tend to get frustrated when things don't happen right away, right? That's normal in mining. Everyone wants immediate gratification, but it takes more time to have stories develop sometimes. And that's what we're seeing, I think, in Mexico, where there has been a lot of positive developments since she's been in office. And we're getting to a point now where it's getting more and more exciting for certain players in Mexico in certain parts of the country. And I think Sonora Gold is one of those, as does my partner Don Durrett. So we'll get to that in a second. Just a bit of housekeeping, everyone. I post my performance out there as a portfolio manager every quarter. So June 30 just ended. We haven't posted yet. We've got until July 31st to really post, but we'll probably put that out there in a couple of days. So if you look at fennickconsulting.com/performance, we'll have our second quarter numbers updated there. We have our 10-year anniversary coming up December 31st, and I think we'll be ranked in the top 5 managers globally for performance if this keeps up. We just had a great second quarter. I just don't know the numbers yet. Also, if you're thinking about starting as an investor with us, there's 2 ways to do that. One is through free opportunities like this, whether that's on the Fennick Commodities Report. You can sign up via YouTube for that for free, or you can go to InvestorTV, and that's a channel that Don Durrett interview on regularly, pretty much every month or twice a month for the last year or so. So that's free content. But if you wanted to get more information about things, for example, when the news on Sonoro came out, I put a note out with a paragraph about our thoughts on this a few days ago. So you were able to internalize that news ahead of the market. And we do that frequently with stocks with positive news or negative news. We want to educate people about what's happening. We also put out emails on a regular basis on macro, right? So on non-farm payrolls on July 3rd, that was not a very important number because it was a slight beat. But if it was a big miss, that would be important, right, to our sector. And these are the kind of things that the Fed looks at to make decisions on interest rate policy. And we are a believer that the Fed drives a lot of activity in the mining and metal sector. And so we've not really seen that in the first half of this year, but we think that as the second half unfolds, there'll be a lot more attention on the Fed. So with that said, Ken, why don't you kick it off here with your take on the news that you just released here in early July.
Thanks, John, and congratulations on your numbers for your fund as well. So with the news release we put out on last Friday, the news extremely positive for Sonoro, and the reason is one of the key elements of being able to proceed to production is to have ownership of the surface rights. The surface rights are granted by the landowner, and in this case here, it's a rancher that controls both our land and the surrounding area as well. And so it was essential that we secure the surface rights now, because our exploration surface rights expired on July the 1st. So it was natural for us to either extend for another 7 years on the exploration, but there was no point in doing that because we're going into production. And so we secured the rights to mine for up to 25 years. It's an option that's renewable after 12 and a half years, or we can terminate it at that point. And so this was probably the key element for us now to be able to secure the the next level of approvals, which is the change of use permit. It's typically accompanies the MIA. And we are expected to get the MIA approval. I can only say imminently, but I can't tell you exactly when. So this particular agreement with the rancher was extremely important. It was probably the most important agreement we've signed in the past few years.
Okay, great. So two things there. One would be, what does MIA stand for, just for those that don't know?
It's the Spanish equivalent of environmental impact statement. And
Okay.
so typically in our conversation, we refer to it as the MIA.
Okay. So that, for all intents and purposes, when and if you, as Sonoro, get that, that is considered a full permit, or how would you word that?
When we get the MIA approval, it'll enable us then to proceed towards raising the construction finance and going towards production. We can actually start the site preparation. There will be smaller permits required, of course, as with any industrial facility, but they're of a minor nature and they're typically handled at the local or state level. But the MIA is one that we've been working on now since 2022. And interestingly enough, in 2022, we fully expected to have the approval by November of 2022. And of course, the previous government were not exactly very friendly with the mining industry and the mining companies in general. So we were stalled until President Sheinbaum was inaugurated in October the 1st of 2024. And since then, there's been a sea change in the attitude of the Mexican government towards the mining community. And we've had more than 50 projects expanded and permits for expansion of existing projects. And so now we're entering into a phase where new projects are being assessed, and I expect that will be approved over the coming weeks and months. So we're in that position right now where one of the companies that are awaiting their MIA approval. And so once we achieve that, the next phase will be to effectively go towards construction finance right away, because we anticipate from the date we get the MIA approval until we pour the first doré bar will be 13 months. And that is at a very conservative pace as well. So I feel confident in telling you that the next phase, the next major announcement on our part will be, in my opinion, the MIA approval.
Okay. So when Don and I interviewed you in early June, we kind of got to the bottom of the fact that you are going to make a positive construction decision. I don't see why you wouldn't, especially given the news that we just saw July 4th, right? No company really is going to put $1 million down if they're not serious about moving forward on construction. Or am I misreading things?
You're not misreading anything, Don. It's we feel very, very confident that the MIA will be approved. Otherwise, we would not have put up this $1 million, and we're going to be paying additional money over the coming weeks as well to complete the first payment. And so we are at this point in time, we are 100% certain that approval for the MIA will be forthcoming.
Okay, great. Maybe you guys could also address news that I saw, I think it was around June 23, because there was news in Mexico about no new concessions. And I love when companies like yours defend themselves and put something out publicly stating, hey, this is how this impacts us or how this doesn't impact us. Would one of you like to comment on that?
John, do you want to comment on that?
Okay, you continue. I think you've got the flow going now as far as the permitting.
Okay, so the news from President Sheinbaum at that time was no new concessions to be granted. Keep in mind, we've owned our concessions, the San Marcial concession since 2014, and the Cerro Caliche concession, the one we're operating on right now, we've owned it since 2018. That is behind us. Nothing has changed there. Keep in mind, Mexico is a state that is governed by the rule of law, and the rule of law states we have the right to develop our project. And so that did not affect us as far as getting the MIA approvals. If if you look at the record of President Sheinbaum over the past few months, especially since February the 1st, with all the projects that have been approved, she is not anti-mining by any way. In fact, she's very pragmatic, and her team are very pragmatic as well. And so we're riding a train right now that is heading in the right direction for the mining industry in Mexico. And over time, I believe it will blossom into a substantial amount of impact on the economy of Mexico.
Okay, thanks for that, Ken. So basically, what you're saying is, and what you said in the response is that you already have your concessions. I mean, this isn't really going to impact Sonoro in any way, shape, or form.
That's correct.
Okay. As we move forward with gold here at 3,300, it seems like every dip is getting bought. One of the things I noticed in your deck, it was either slide 5 or slide 10 as I was preparing for this. It showed a sensitivity analysis on gold. And I think the range you guys were using was 1,600 an ounce to 2,000 an ounce. I know 2,000 was the maximum because I was surprised that it was so low, given that gold is now at 3,300. But what clients sometimes don't understand is that it takes a lot of time and money for companies to update these things legally, right, through the process of PFS or a PEA or what have you. So could you guys, is there anything out publicly that you can share? And if the answer is no, that's fine. Just, about how much more meaningful, like what is the reduced payback time, if you will, on the project with gold at its current price?
Well, I think to summarize it, the short answer is no. I can't tell you exactly what the results of a revised PEA when it is produced, but we have started the wheels in motion now to update the PEA. We're getting updated costs for inputting into the model. And with all the work we've been doing with SEMARNAT, the environmental agency, over the past 3 months, there will be some improvements on the environmental and on the process side as well that should enhance the value of the project. So we're looking forward to producing a new PEA. It may take another, I would say, 2 to 3 months, but I can't give you an exact definitive date right now. But I think it will have a dramatic impact on the value of the company because we're underrepresented right now as far as value is concerned in the marketplace. And I think a brand new PEA should have a positive impact.
So, John,
yeah, we would agree. Go ahead, John.
While we're not able to make comment on that, I think the only thing that we can say is people should look at the all-in sustaining costs. Let's just say it's showing about $1,400 US. And if we take gold maybe at $3,400, that's basically $2,000. That is sort of cash flow surplus, right? And then look at the potential ounces a year that will flow from the company. And it's relatively straightforward to work out what the revenue stream will be. And from there, to calculate what a net present value should be.
Yep, I totally agree, John. And that all-in sustaining cost, AISC, is just under $1,400 an ounce, according to your website. So I'd encourage listeners to go to Sonoro Gold's website and look at that deck. It's either slide 5 or 10, but it was definitely impactful for me to see that the payback time on this project is very low at 1,600 to 2,000 gold, but we're not there anymore. And I don't see us retracing to 2,000 gold anytime soon, given the backdrop globally. So it's a very exciting project. And what also excites Don Durrett and I is the potential for growth. You guys have only drilled about 30% of the project. Is that correct?
Right. That is correct. And so we've identified a total of 25 parallel vein structures trending towards the northwest, right across the east-west breadth of the concession. And we've only drilled so far about 7 or 8 of those. And as we're continuing with the exploration program, we're continuing to find more and more mineralized zones that had beforehand never been discovered. So I think when we talk about 30% maximum of the known mineralized zones having been drilled and assayed to date, I think that's quite accurate. Now, one of the other things that is really should be mentioned, and once again, I can't go into specifics on it because until we get a new PEA produced. But the fact that the price of gold is now at $3,300, and the PEA was produced at $1,600 gold, means that material that was hitherto classified as sterile may become productive. So the size of the resource may be possibly impacted by the fact that at $3,000 or $3,300 gold, you're taking material that was hitherto going to go to the waste dump. Now we can put it to the crusher and onto the leach pad and have it as a productive material as well. The original cutoff grade was 0.2 grams. So the new PEA will look at potentially lowering the cutoff grade and increasing the volume and the size of the resource.
Yeah, it's a great point, Ken. I don't think investors think about that as much as they should, because it's time intensive and cost intensive for companies to to update their PEAs or even put them out at all. And so a lot of times companies just say, well, we'll just wait. So I'm excited that you're thinking about doing this in the second half of 2025.
It'll be a document that I think will transform the perception of Sonoro and in a very, very positive manner. So give us a few months to get that completed, and then we can chat about it in greater detail as well, John.
Sure. In summary, is there anything that you guys wanted to mention that I left out that may be recent news, or your thoughts on anything in particular?
I think one thing, John, is this: it's being recognized, Sonora, is that we actually do have a business and not a promotion. And of course, that's a big hurdle for junior companies out of Vancouver, where there's so many promotions. And we've now gone past the idea, well, you've gone to production because that's all you have. And through people as yourself who take a close look at the company, who can speak independently, they recognize that we do have what it takes to go to production. We have the team, we have the project. In fact, we have another one called SMOFF, but we have a good structure. Inside is holding 28%. European following is extremely high, as you know. And we have a business plan. And we've never wavered from that business plan. We've been told we should go after high grade. Well, we say that high grade is interesting, and it may well be the way to an underground operation in the future, but we're going to focus on showing the public this is a highly profitable mine as an open pit operation. And the last thing is the access to capital. And our history will show we raised several $100 million for projects. So we're not concerned about the project debt that we'll need for this. We have options out there for us for the debt, and we have discussions that are ongoing. And I think we'd like to leave this on the basis, John, saying our goal is to minimize shareholder dilution. We are big shareholders ourselves, but we regard every shareholder as being valuable. So we have no intention to roll back the stock. We have no intention to convert our loans to the company into shares and things like that. Okay, so we are here committed to the company. We're comfortable with our position. We want to show the shareholders that this is a commitment that we've made to go to production, and we're moving in the right direction. And this surface right agreement is the penultimate hurdle to get over. Now we're past this. It's just the mere, and we're production ready.
Yeah, that's exciting. I mean, it's been a long road since Ken did mention that you were ready to do this in Q4 of 2022, and
yes,
for reasons that were out of your control, you weren't able to do it till second half of 2025. But you're right there. Gold is stubbornly high, way above your all-in sustaining costs. So the profit margins on a project like that look to be extreme. I mean, if you look at the big boys out there like Newmont, some of the others, they have higher all-in sustaining costs than $1,400 an ounce. So very exciting times for you guys. Congratulations.
Thank you, John.
Thank you very much.
Yeah, of course. Nice to see you both. And hopefully John Darch and I can have you back on the show when we have some positive news to discuss later in the year.
We look forward to it. Thank you, John.
Thank you again.
Thanks everyone for listening today. I'm John Fennick with the Fennick Commodities Report, and this was Sonoro Gold, ticker SMOFF in the States, SGO in Canada. Thanks everyone.